Hey traders, Jason from Lever Brothers. So it's the beginning of March. I want to kind of get an idea of what's going on. Okay, I want to see what's doing well, what's not doing well. Are there any clues about the future? I just want to dig into it and see what's going on. Okay, when I do this kind of a video, I don't have a conclusion at the beginning. Okay, I want to run through charts. I want to see what's going on. And sometimes not having a conclusion is the conclusion. Okay, you don't always have to be bullish or bearish or this or that. Sometimes not knowing what's going to happen is a valuable thing to admit. I'm not saying that's what the case is right now. I'm just saying like that's the point here is like let's not have a bias. Let's just look through some things. What's doing well, what's not doing well. Look for hints, look for clues. And maybe there's something interesting going on. Maybe there isn't something interesting going on. All right, let's get into it. All right, so here's the S&P 500. Absolutely nothing going on. You can see all year we've been stuck in a range. Not only have we been stuck in a range, but this is one of the narrowest ranges to start a year in history. Okay, this is like a little bit more than 200 points, 225 points, something like that. To start the year is, as on a percentage basis, is one of the narrowest in history. Okay, it's been a very quiet market on the surface. Now we know stuff's going on beneath the surface. We know some stocks, some groups doing really well, others doing really, really poorly. Somehow, some way, the rotation is perfect. The weighting of the S&P is perfect. And somehow the index has gone absolutely nowhere, even though so many stocks beneath the surface are moving a lot. So here you go. Market is getting nice and tight and wound up. You can see the 8, 21, and 50-day moving averages have all flattened out in the middle of the range. Market's in a holding period. Maybe it breaks out. Maybe we keep doing this for a couple more months. We don't know. Okay, no strong bias here. Now, what I have here is I took TC2000, okay, and I grabbed their industry indexes and I ranked them. And I know you can't read this, but I ranked them. This column here is what I ranked them. And this is the distance they are from their 20-day moving average. So obviously, if they're really far from their 20-day moving average, they're doing really well. And if they're really close, then they're probably flat in a range, or they could have moved around and just come back to, or just did a mean revert. So anyways, these are going to be your strongest groups per how far they are away from the 20-day moving average. And so I'm going to look at the groups. I notice here's silver, gold, oil and gas, exploration and production, oil and gas midstream, copper, industrial metals, metal fabrication, oil and gas, aluminum, oil and gas. What else do we have here? Another oil and gas. Some utilities down here. So the point is, these are like the top 30 or 35 groups based on this criteria. And like almost half of them are some sort of metal or oil and gas. Okay, those are going to be your strongest groups. Now let's dig into some of the charts here. All right, so here's semiconductors acting really well. Kind of came out of a base here. Resistance level up here, tried to break out last week, got hit hard after NVIDIA came out with earnings. But you know what? Overall, we still have higher highs, higher lows. We're still channeling up. Just because that breakout failed doesn't mean the whole group's going to totally fail. Overall, semiconductors continue to be in good shape. Here's IGV, which is the software ETF. It's been one of the hardest hit groups. We know that. But things are getting a little bit more interesting here because we have, a flush over here beginning of last week. Then the group rallied back, huge volume over here. Then it settled in. And even today, it gapped down a little bit and immediately moved up. It's up like 1.5% right now. So there's a possibility that this is bottoming. Okay, we don't know for sure, but it's at least worth noting that maybe the worst is over. If the market could hold up in a holding pattern while so many big software names get hit hard, what happens if software turns? Okay, either money is going to come out of something else to counter it, or the market's going to probably get a nice boost. Bitcoin, also a group that has done very poorly. Okay, it tried to break out over here. As you can see, it failed. Fell hard in November, kind of flagged up, channeled up like this, fell again. But like software, it's starting to get a little interesting here because we got a base that goes back about a month. We have some decent recoveries in here. Ideally, we'd see a move up here, get rejected by the 50-day moving average, come back down and test the 21, which would kind of do something like this, and then get a nice bounce off of that. Okay, no guarantee. We had a nice move up over here in the early January, came down and tested the 50-day moving average, all the moving averages, and then moved up to a higher high. But then, as you can see, it got clobbered. Okay, so there's no guarantees. But it's simply interesting that one of the worst groups, and it is a little bit of a sign of like risk on, risk off for traders willing to take a chance. It's encouraging if if you want the market to move up, it's at least encouraging that Bitcoin seems to be forming a short-term bottom. Okay, might last, might not last. It's at least worth noting. Okay, within the Bitcoin group, Riot doing not doing well, but it's pretty neutral. Has not fallen apart with Bitcoin. Today gapped down, moved up. It's up more than 1%. You got a little bit of resistance level here. If Bitcoin bounces, Riot should do well, should be able to go a couple points. And then Mara is another one from the group. Based here, came out of the base last week. Friday was a good day. Today it gapped down and then recovered. It's up 7% today. 10 is a key level here, both as support here. Now we got 2 days in a row where it's up near resistance. If this thing can settle in here and break out, even if Bitcoin just bounces for a couple of weeks, Mara could bounce 2 or 3 points, which for a $10 stock obviously is 20-30%. So it's worth keeping an eye on. It's encouraging from a risk on standpoint that a stock that has been really weak, has gotten clobbered over the last couple of months, is starting to show signs of bottoming. Gold. Okay, we know gold got clobbered at the end of January. It has fought its way back. It's not quite at its high, but it didn't completely fall apart other than just a couple down days. The 50-day moving average continues to support the group. And then gold stocks, this is GXD, which is going to be gold miners, also took a hit, but it's actually back at its high. So am I chasing up here? No, but I think gold is in a long-term uptrend, and I think we get another pullback. You can look for entries on a pullback. The group is still, quote unquote, in play. Silver, bigger hit than gold, mostly moving sideways here. It has some proving to do. I would say the group is still in play also, especially considering you got stocks like AG, which, double bottom here after the big drop, and then it ran up to a new high. So silver is just kind of consolidating, but look underneath the hood. There's some silver stocks doing well. Here's industrial metals and minerals. Got a resistance level here. The numbers over here are irrelevant. Came out of a couple month consolidation pattern here, rallied up. Now it's consolidating again. Even if it dips here, it'd be fine. Okay, we've been at Lever Brothers. We've been playing the industrial metal stocks for several months. They're volatile. Some have run up a lot, giving us a lot of profit. Just got to use stops because some of them actually got hit too. But as a group's still doing very well, and it remains a place that we should be paying attention to. Copper. Okay, obviously big uptrend. Came out of a consolidation pattern here, broke out there. Now we spent the last week consolidating above that level. Everything looks good for copper to continue on. Aluminum, I'm going to use Alcoa as aluminum because the group isn't that big. There's only a couple aluminum stocks even worth playing, but big consolidation pattern. This is another stock we've played a few times, during fall and early winter months. Now it's in consolidation mode, so aluminum still seems to be in play. Energy, here is XLE, came out of a base here, running up. Part of this is going to be in anticipation of the war. It's like this war in Iran did not just happen overnight. It's like you could see that a lot of stuff being lined up in bordering countries over the last couple of months. So like there was definitely some anticipation of war. We got to be careful of a possible blow off here because XLE gapped up to here, and currently it's trading down there, still up, but not nearly as up as much as it was. So oil stocks are definitely in play. You saw the graphic I put up earlier about like they have many spots on that table, but you got to be careful here as we get kind of stretched because these things don't go up forever. Trucking continues to do well. Lots of bounces off the 21 here. New high today. Railroads continue to do well. So another transport. So it's a place to be. Although personally I find the railroads frustrating to trade. I don't trade them because in the past I just didn't make any money, or maybe it was me. Maybe I just didn't trade them well. But I note that they're doing well, even though I personally probably won't play them. FNGU. So this is the top. It's not the top 10 tech stocks, but it's top tech stocks. 10 of the top tech stocks been really weak. This is a leveraged version, but there's signs of a little bottom here. We got a double bottom here, maybe a little resistance level here. Maybe the mega caps are starting to bottom. Okay, no guarantee. What I'd like to see is a legit move up, maybe a back test somewhere, and then continue up. Okay, but at least it's encouraging that I'm starting to see some sign of a bottom here. And the comment I made before is that if the market can hold up as well as it's been holding up, and the mega caps haven't done much, what happens if the mega caps actually bounce here? That'd be a pretty good sign. All right, so here's that initial graphic I showed. This is the exact opposite. These are the worst groups based on how far they are from their 20. Okay, so all of these groups are going to be underneath their 20-day moving average. So I want to look at this. Look at this. Recreational vehicles, department stores, truck and auto dealerships, airlines, gambling, home furnishings, beverage, staffing and outsourcing, real estate. What else we got here? Home improvement stores. There's some banking in here. Leisure. What else we got here? Specialty retail, auto manufacturing. There's a lot of auto parts. There's a lot of consumer-facing groups here. Okay? A lot of consumer-facing groups. So the sum of all this stuff is what's strong? Oil is strong. Metals are strong. They remain strong. They've been strong. They remain playable. Just, keep stops in place. You never know. What's weak? Consumer stuff is getting weaker and weaker. Even though trucking, railroads are doing well, stuff that faces consumers are getting weaker. And then what I find interesting is that software and Bitcoin, which have been two of the weakest groups over the last several months, are starting to show signs of bottoming, and the mega caps might also be bottoming. Okay, so that's at least interesting. So the sum of all this is what's going to happen next? I don't know what's going to happen next. The market is mostly in a holding pattern. Rotation has been so perfect that the good and the bad have canceled each other out, and the indexes have just moved sideways. I don't think it's a great sign that metals and oil are leading while consumer stuff is lagging, but it's at least encouraging that software, or I should say at first, semiconductors are doing fairly well. Software might be bottoming. Bitcoin might be bottoming. The mega caps might be bottoming. So maybe there's a little hint. Now, bottoming could be false breakouts. We go run down to new lows. Bottoming could be move sideways for a couple months and then break lower. But at least there's a little bit of a sign. Am I willing to go all in? No, I'm 80, 85% cash right now. That's what I've been for a while. No big bets right now. Don't be a hero. The path forward is not clear. Just finding it interesting that some of the groups that have been the weakest are starting to show signs. All right, we'll see you next time.